now is the Fed's in wait and see. But are those inflationary pressures on the horizon still lingering enough for them to stay hyper vigilant on inflation?
No, I don't think so. No, I think that they've done enough. I think the point now is that they go too far raising rates. You know, the Fed, they had some staff members of the Chicago Fed that came out a couple of weeks ago and said that interest rates were right where they should be to have the effect that they want. So I know that with the staff members coming out with reports like that, I know the Fed's going to take heed to that. They're going to listen to it. They're going to listen to what their staff members are saying. I think they've gone far enough. I don't think the Fed's going to raise. I think the CPI print's going to be good. I think the market's in an uptrend. I think people should stay long and be buying stocks.
Vance, I mean, we can say these things. We can say these things, but we still have gasoline prices that are markedly higher over the course of the last several months than they have been over the course of the last year. And we know that those consumer prices are very much affected by what happens with gasoline prices and consumer wallets especially. So is that American consumer going to be in trouble heading into the fall and certainly during the holiday shopping season?
I don't think so. I don't think the gas prices are going up. We're watching it just like you are, Dom. But you look at what the Fed looks at. A lot of what they look at as far as interest rates goes is housing and housing costs. So that's one of the areas that's a little bit more important than gas and fuel prices. But yeah, fuel prices does affect everything. But as far as a trader, you know, go look at XLE and make some money off of it if energy's going up. But I don't think it's going to affect the consumer at all. There's too much cash on the sidelines. People are making good money. Too many people are employed. It's just a great, you know, the economy is doing fine. The market's in an uptrend. I think all these different data points and news that do nothing more than scare investors out of a great environment to put money to work in the stocks.
Okay, so speaking of putting money to work, Vance, if you're that bullish and that optimistic about what's going to happen for the coming months, where exactly are the opportunities? Some people say that the market is already overvalued, especially in key parts with regard to technology, media, and telecom.
Yeah, well, you look at that too, Dom, and I hear what you're saying. But, you know, if you take out the top seven, as we all know, the price to earnings ratio on the vast majority of the S&P 500 is very reasonable. What, 15.4, somewhere in that range. But look at AMD. AMD's pulled back where it's a nice buy. NVIDIA is always a nice buy right here. Anytime NVIDIA pulls back, it's a good buy. But look at Salesforce. CRM's looking good too. You know, it broke out. It's looking like it's a strong buy, and it's going to move higher. And I think that if you look at the Qs, Dom, there's two different pivot points too. 380, 380 on Qs is at one pivot point. If we break above that, we should run up to 387. Break above 387 on the Qs, and I think you're going to run into a new high by year end on the Qs and the S&P 500.
All right, Vance, because it has been a very bullish story for you so far, I need to ask if there's anything out there that scares you a bit and would make you rethink just how bullish you are about the market.
Oh, I think there's always things that bother you, things that we can't see or that we can't know. A pandemic or some war breaks out somewhere. That's something that can't be gamed or measured. So you just have to deal with it. But that's something that we can't know. But what we do know, Dom, is the trend's up. Don't fight the trend. The market's moving higher, and so participate in it.